Hello and welcome to the lecture of International Business Environment. In today's lecture of International Business Environment, we will going to have a discussion on the balance of a payment, that is Unit 3 of Block 1. So, as we going to discuss about the balance of payment, we will going to have a glances on these topic, that is definition of balance of payment, underlining the principles and conceptual framework, balance of payment accounting, components of balance of payment, deficits and surpluses in the balance of payment disequilibrium, and factor affecting balance of payment. So now, the very first topic is to what exactly the balance of payment is. If we consider the balance of payment, it is basically the accounting records of all the transactions happen in one particular country. As we were discussing about the international businesses and trade happen in the international businesses, we must keep the records. Same with the finance or the accounting department of the organization. They keep the records of all the transactions occur in a particular business. Same balance of a payment, keep the records of all the trades happen in a particular industry in a given period of time. That is why the balance of payment sometimes called as the balance of international payment. That means we were taking care of all the international payments and international concepts. All the transactions related to a particular country, that is what, selling of goods and services, transferring of financial institute, all are going to be recorded in the balance of payment. These leads to have a brief or detailing about all the products and its transferring. That is why the balance of payment is very essential when we were actually discussing about the international businesses or a particular country entered into an international business. So in short, it considered all the exports and import of goods and services in a particular country. As in the balance sheets, or we can say that, or the accounting records of a particular organization, हम जब एक organization के particular records बनाते हैं तो उसमें बहुत सारे accounts हम बनाते हैं, like we prepare all full-fledged balance sheet, we prepare all having a detailing of all the assets and liabilities, we make profit and loss accounts. So that all accounts is prepared in the one particular organization, maintaining at the time of maintaining all the balances or the trades. Similar will happen with the balance of a payment. This is what, there are the two classified transactions in the two accounts. The very first is the current account and second is the capital account. So current and the capital account are the two accounts which are taken care in the balance of payment, and yes, they are basically keeping the records of all the inflows and outflows payments in the particular country. If we discuss about the current account, current account consists all the transferring of goods and services, and yes, at the same time all the financial transaction, financial investment or financial payments all covered in the current account. And capital account is what considering or taking care of all the dealings of a financial institute. So that's financial instruments which are being taken care. Now, if we talk about the very basic definition or the definition of balance of payment was consist of a two main thing, or they state a two main thing. One is economic territory, another is residence. When we talk about economic territory is basically a geographic territory in which all the transactions are occurred and it was taken care by government. But all the happenings in that particular boundaries is taken care by government. It's economic territory. When we talk about residence refers to the institution or individual which actually reside or have an economic activity in particular territory. That means residence is that single person or that unit which actually come into the transactions of economic activities and or be a resident of that particular territory. So that comes into the residence and the economic territory. Now, as we can see in the picture, this is what basically the introduction of balance of payment. This basically gives us the idea about how balance of payments look like. It is an example, like the balance of payment have an current account, capital account, considered all the errors and omissions, and they have an overall balances. So current, capital account, these are the two accounts which we were having a discussion, that these are the two accounts which are to be considered. These accounts are subdivided into the various subdivisions, subtopics like merchandises, invisibilities. Capital account was considering all foreign direct investment, all portfolio investment, loans, banking capital, and yes, at the same time rupee debit services, other capital and total capital account was considering. So in this balance of payment, we were considering the 6 years, 6 continuous years of one particular country and how they were actually transacting all their international trade. These figures state that. And yes, these are the major items of India's balance of payment, that basically the export, import, trade balance, how much we were dealing with the invisible, and yes, current account balance was what and capital account balance was what. So they are having an example. This is basically an example about India's balance of payment. Now, the underlying principle and the concept framework of a balance of payment. If we discuss about the principles or the concept of balance of payment, the concept is what? That there must be a transaction and a trade between the countries. Then only this comes into the balance of payment. Balance of payment is going to record all those trade transactions. So that is one of the very overview or a layman concept of balance of payment. In balance of payment, there was a 5 kind of transactions can be occurred into. That 5 kind of transactions state that yes, in 5 different manners we can enter into a trade. अगर बैलेंस ऑफ पेमेंट की बात की जाए तो इसका एक मेन कॉन्सेप्ट यही होता है कि कंट्री के जितने भी एक्सपोर्ट और इम्पोर्ट्स हैं उनकी डिटेलिंग पूरी मेंटेन करनी है. दैट मीन्स उनकी पूरी ट्रांजैक्शंस को एक रिकॉर्ड किया जाता है. एंड येस, एट द सेम टाइम अगर हम बोल रहे हैं ट्रेड ट्रांजैक्शंस को, सो ट्रेड ट्रांजैक्शन एक इकोनॉमी में 5 तरह की हो सकती है. द वेरी फर्स्ट इज द बार्टर. बार्टर इज व्हाट? एक्सचेंजिंग गुड्स एंड सर्विसेज अगेंस्ट गुड्स एंड सर्विसेज. जब एक गुड्स एंड सर्विसेज के बदले में आप गुड्स एंड सर्विसेज ले लेते हो, एक ये भी ट्रांजैक्शन है जो अकर हो सकती है एक इकोनॉमी में. द सेकंड टाइप ऑफ इकोनॉमिक ट्रांजैक्शन इज purchase and a sale of a goods and services against the financial item. The very general one कि हम जब goods and services को ट्रांसफर कर रहे हैं या कोई भी परचेज या सेल कर रहे हैं, बदले में उसके फाइनेंस ले रहे हैं, यानी कि बदले में उसके मनी ट्रांजैक्शंस ले रहे हैं. So that comes into the second kind of economic transaction. Third kind of economic transaction is the interchange of financial items against the financial item. Now ये एक exchange है between financial institute in the against with financial institute. For example, the selling of securities. So that is what comes into the interchanges of financial items against financial items. The fourth kind of transaction is the provisions or acquisition of goods and services without recruital, in terms of we were providing a grant for the aids we were providing. This kind of transactions was occur in the particular economy. Or there may be an acquisition of financial items, that is what providing a gift, or yes, at the same time entering into this kind of an exchange, which basically acquiring the financial items. In this we can state that for example it is what having in a taxes or providing or provision of taxes, that's covered into this. Now The balance of payment accounting. Balance of payment accounting is very much similar to the accounting concept. As accounting concept is having a double entry accounting records, that means it's a double entry bookkeeping. Same with the balance of a payment. There was in a double entries. When there is in a double entries of your balancing of payment accounting, that means there must be a debit and credit. क्रेडिट एंड डेबिट और डेबिट एंड क्रेडिट इज बेसिकली व्हाट, जब आप किसी भी तरीके की एक्सपोर्ट या इंपोर्ट करेंगे तो दो साइड्स एंट्रीज होंगी उसकी, एंड यस एट द सेम टाइम इनका बैलेंसिंग होना बहुत जरूरी होता है, सेम एज द बैलेंस शीट ऑफ ऑर्गेनाइजेशन, कि जब तक वो बैलेंस नहीं होगा दैट मीन्स देयर इज सर्टेन एरर्स एंड ओमिशंस। तो हर एरर एंड ओमिशंस को हटाते हुए दोनों अकाउंट्स का मेंटेन होना, दोनों साइड्स का बैलेंस मेंटेन होना बहुत जरूरी होगा। सो दैट्स कम्स इनटू बैलेंस ऑफ पेमेंट अकाउंटिंग। सो दे वर व्हाट, considering all credits and debits, leaving aside all the errors and omissions. If we talk about the international transaction, it's basically classified into the debit entries or credit entries. अगर हम डेबिट एंट्रीज की बात करते हैं, इट्स बेसिकली इन्वॉल्व ऑल द पेमेंट्स टू द फॉरेनर्स, यानी कि हम जितनी भी पेमेंट फॉरेनर्स में भेज रहे हैं, दिस इज डेबिट एंट्री. And credit entry was basically receipt of a payment from the foreigners. That means whatever we were gaining. So that comes into the credit part. So that is why credit comes into the plus side, debit comes into the negative side. So that comes into balance of payment accounting. There are certain principles, or we can say there are certain rules of balance of payment accounting. The very first rule is all the transaction which leads to an immediate or prospective payment from the rest of the world of a country should be recorded as an credit. That means अगर हम किसी भी तरीके की पेमेंट रिसीव कर रहे हैं रेस्ट ऑफ अ वर्ल्ड से, वो क्रेडिट साइड जाएगी. All the transaction which result in an actual and prospective payment from the country to rest of the world should be recorded as debit. That means whatever you were paying is what comes into the debit side. And a transaction which result in the increase in the demand of the foreign exchange is basically recorded as debit entry. यानी कि foreign exchange में अगर किसी भी तरीके का increase है तो वो debit entry में, same as if it's an increase of supply of that, so it's in a supply of that foreign exchange, तो उसमें credit entry में increase होगा. That means that goes to credit side. So this is what the basic rule of or we can say that the accounting rule of BOP. Now, what are the components of balance of payment? As we discussed in the very first slide that there are the type of accounts in the balance of payment. Similarly, there are the three components of balance of payment. The very first is current account, second is the capital account, and third is the reserve account. The very first is the current account. As yes, current account consists of all the exports and import of goods and services, or they considered all the financial investment and payment in it. Current account basically includes import and export of goods and services, and which reflects the government and private gifts and grants also. We can discuss the subdivisions, and let's discuss subdivisions of current account in a very detail. The very first is merchandises, as जो कि हम लोगों ने एक previous balance of एक sample देखा था balance of payment का, उसमें current account की definition क्या की subdivision थी merchandise की. Merchandises are all the goods, all the export and import of the goods. That is, if there was an export, that will goes to the credit side. If there was the import, that will go to the debit side. Second is invisibles. Now, what are the invisibles? Invisibles are all the services which are provided or rendered by one country to another. That means, for example, if India is rendering a service like travel, transportation, hospitality service to the other country, that will goes to the current account. That was the first, the current account. Then second comes the capital account. As from the very starting of the session, we will discussing that capital account considering all the financial instruments. That means under this, the group of transaction leading to change in the foreign financial assets and liabilities to the particular country. So they will considering all the dealing and all the transactions happens in the with the financial institutes. This basically divided into the three part. If we count the capital account was divided into the three. That is what the private sectors, the banking, the private ones, the banking, and the others. If we conclude the private are basically that any kind of a loan was taken by the unit or the individual with the foreigners, so that comes into the private account. Second is any kind of transactions happened in the banking sector. That means whatever the banking transactions are occurred in that in the globalization, that's all comes into the banking part. The third one, other is basically considering all that official parts of the particular country. Official have a direct impact on the, we can say that the government of the particular country, because this count all the transaction which is done by the officials of that particular country. So that comes into in the capital account. Then what comes into the reserves account? Reserve account is what the reserves which are taken care by a particular banks of a country. So that means this is mainly an asset which is used by a country to settle all the deficits and surplus. So that comes into the reserve account. Now, as we discussed that yes, reserve account is basically used to manage all the deficits and surpluses of balance of payment. Now, what is the deficit and surplus? Surplus is what something which is good and having a very potential kind of a thing. So, for example, in balance of payment, the credit side exceeds and the debit side automatically decreases. So, that is what? That is a surplus in the balance of payment. Now, if the situation is vice versa, in terms of that now debit side is basically increased and credit side is not. So, in that case, it's a deficit. For example, if we done a maximum export, that is what increase in the credit side. So, that is what the surplus. If we do maximum import, that will add on to the debit side. So, that will shows the deficit. So, this is what the deficit and surplus of a balance of payment. Now, there are several concepts in the balance in BOP. Yes, the very first concept is the trade balance. What is trade balance? Trade balance is what balancing all your merchandises in a trade. That means in which you were permitted to have a trade, and balancing that transaction comes into trade balance. Second is balance in goods and services. It is what balancing all your export and import of both goods and services. The third is the current account balance, maintaining the balance on the current account. Automatically, if a country is able to balance their trade and balance to make a balance in the goods and services, so that means this thing leads to the balancing in the current account also. So there is the third stage is what the current account balance, or third concept. And then another concept is balance on the current account and a long-term capital. It's state away maintains that yes, bringing out a balance in the capital account also. Now, what is balance of payment disequilibrium? If we talk about balance of payment disequilibrium, now what is basically equilibrium? Equilibrium is what is drawing upon its international reserves to make the excess payment null, accumulating such reserve as a result of its receipt. That means when a country is able to manage all their reserves and all their payments, that or receipts or payments, that will come into equilibrium. So disequilibrium simply state that yes, there is not an equality in the both the payments and receipts of a particular country. So there is an imbalance in export and import of a country that state away reflects the disequilibrium of a particular country. Now, what are the factors which affects the balance of payment? The very first factor which affects the balance of payment, that is inflation. Okay. Now, if an inflation was increased in a particular country, so automatically it straight away affects the goods and services which are in that particular country. That effect on the goods and services straight away affects the current account of a balance of payment. So the very first factor of BOP is inflation. The decrease in the inflation or increase in the inflation affects your balance of payment or country's balance of payment. Now the second is a national income. Now, if the national income of particular country increases, then automatically they are able to serve when they were able to serve, automatically they affects the export and import transactions of that particular country. So automatically the national income effects comes into balance of payment. Now, if there was the government restructures, when there was in a certain changes in the government policies, suppose the tariffs are increases or taxes are imposed by the government, more taxes are imposed, so automatically the import gonna minimize, right? So in that case there was an effect on the balance of payment, so that comes into government restructures. Now another is exchange rate. Exchange rate is basically defining by the currency value of a particular country. So if there was the value of a particular currency is low, so in terms of it automatically affects the balance of payment. That for example that we have to again pay more and we at the same time give more goods if the exchange rate or the value of that particular country is low. So it affects the export and import of that particular country. So straight away that effect shows on the balance of payment. So that comes into factor affecting balance of payment. Now, how we can recover from that balance of payment? The very first is method of correcting disequilibrium. That is what use of the past reserves. Every country have their reserves in the reserves account. So these reserves help to maintain the deficits and the surpluses of that particular balance of payment. So this can be used. The second is borrowing from IMF. Yes, if the certain loans going to be borrowed by the International Monetary Funds, then they can correct that disequilibrium. Then monetary and fiscal policy measurement. It is one in which government can manage all their monetary activities in the particular country. So that was changes in the policy may help the particular country to manage this disequilibrium. And exchange rate adjustment. Yes, economy tries to increase the value of money through which the exchange rate could be possible and better. So these are the four methods through which the disequilibrium of a balance of payment rectified and done in a proper manner. So this is all about for the today's session. So thank you so much. IGNOU Books.